No influencer, anybody is talking about this.
Let's talk risk management. So again, I don't complain. I don't claim to be an expert. I'm just working on fixing the problems that I bring to the table that are me. And size is definitely one of them. If I am trading this, like let's just say I'm trading one mini and I took 2 losses, right? And I know that maybe some of you guys are like, well, my stops aren't 50 points. Well, today the opening range was 100 points, right? To give you an idea. So the whole opening range was 100. This is not as big as we think it is. It feels like a lot because YouTube makes us think that 10 points and 20 points is normal. But 10 points and 20 point stop losses, I'm sorry, I'm going to start on this topic. We're going to start here. 10 points and 20 points is great if you're micro scalping, only going for 10 and 20 points. And some people, not to like talk smack or whatever, they're really good at it. Like, so do you, like, if you're good at it, by all means, you're buying the levels, you know your odds, and you're disciplined and you're getting payouts, stick to what you know. I super support you. But for the vast majority of everybody else who are hanging on to this concept of 10, 20 point stops, when the truth is 10 points isn't going to, like, if you put a 10-point stop on this candle, it's not going to invalidate the buy. You would have got knocked out. You know what I'm saying? None of that invalidates your trade. So to me, stop loss should go out on principle, not where you want them, but where your trade idea is no longer valid. That's where stop losses go. So on that level, you can put this in whatever you want. This field is completely customizable. You can say, hey, look, he has a $3,500 buffer. Let's say his average stop loss is 30 points. Okay. And let's say he wants to do a mini. That's how much he's going to lose on the day if he took 2 losses, right? And he took 2 contracts. So if he does 1 contract, he's going to lose $1,200 on the day with a 30-point stop. It's not as easy as people think. So anyways, that's the customizable field. The field that I'm looking at is more the rest of this. So this whole chart is built off the principle of using 1 micro per $1,500. Okay. If you stick to one set of math, and again, we second guess ourselves, we do janky math, we go back and forth. Well, we say, hey, we have $500 above the buffer, so now I can double down, or now I can switch to a mini. I've done it. I'm sure others have done it, and it's a really dumb decision, right? We have to call a spade and stop making the same decisions that are costing us the problems, right? We have to stop making the wrong decisions so we can start making the right ones. On that principle, $1,500, 1 micro, is how much I will trade at a time. So that means all of my 25K accounts have between what? $1,000 and $1,500 worth of drawdown in general, which means I'm allowed 1 micro. Worst case, if I doubled down, and that's why I have the 2, assuming I took 2. So what if I doubled down on that trade? Because sometimes, I do want the room to be able to do that. And of course, to scale out helps a lot. That means on 2 micros, I'm still only losing $200, which means I can afford lots of days like that, right? On average, I'm not going to have that many days like that. So I can know the law of averages will pay out. 70% of the time I'm going to win. 30% is going to suck and I'm going to lose, but I can handle it because I know the numbers. I can afford that. Notice how tricky this area is. And honestly, I think that's where the 50K accounts gets you, is because they're at this area where they're really hard to plan risk for, because none of the firms that I know of start with $3,000 drawdown. All of them start with like 2,000, 2,500, and some of them on top of the 2,000 or 2,500 have this whole, what is it, like $1,000 daily loss limit, right? So you can't lose more than $1,000, which means that account should not be here. It should be here. Okay, that's my 2 cents. But anyways, 50K account means what? I have mine set to 2 micros. I'm trading 2 micros at a time. Worst case, if the range is tight enough or the price action is still right, I can take 2 of those, giving me 4 micros, knowing that on that balance, I'm still only going to lose about $400. Can you afford to lose $400 on your $2,500 drawdown? Yes, we can. Is that going to kill our trailing? And here's the other problem, right? Notice how this is so small and it's frustrating, but if you did this, you're not going to lose your trailing drawdown either, because that's where most of us are getting our butts handed to us. At least I'm speaking for myself. The trailing drawdown beats me to death. I can blow an account in the green. Very frustrating. But in order to fix that, this will fix that. So this has really fixed that for the most part. So here you go. These are the accounts I like the best from Apex. So the ones I'm holding on to the longest, which I'm very proud of. $4,500 is the starting drawdown, which means I have mine set to 3 micros, okay? And I know if I want to take another position, it's going to give me 6. My max loss is only going to be 600. That does not break the MAE rule. That does not break my trailing drawdown. And even if I took several days of that in a row, I'm not going to blow the account. Because what do you see? Like, what do we usually see? I'm going to use this screen just for conversation. Oh, I wish I had my trade Zella up right now. I don't. I'll pull it up. But when you see these people with these big winning streaks, what's one of the most common things we see? We see when the red comes, it also comes almost in a streak, doesn't it? And that's my opinion. So I will have this like super grand period that's like I feel like I'm invincible and I might be Thor or Captain America or something. But when the red comes, it kind of comes in this way that it's like it's almost like you feel like there's something wrong. And then sometimes it is. There's other aspects, there's markets or tariffs, there's whatever, but most there's tech stuff. When you have that janky fast price action, that unpredictable barcoding, like what we're saying now, we're going back up, it the tech stuff, it usually happens kind of law of averages all in the same week like this, you have this same period. So when we're planning for this, we need to plan not for, hey, I took one trade and won or lost. We need to plan for, I took one trade and I did this 3 bad days in a row. Can my account survive? Because if my plan doesn't plan for that, then our plan isn't good enough. And that's where I'm coming from. So I wrote this. It's still a work in progress. I'm kind of stupid excited about this too. Hold on, let me expand it for you guys a little bit. This field is also customizable, but figure you're making $300 a day on 10 accounts with an only 80% win rate. So even an 80% day win rate, which means you could lose a lot. That means you have, well, 4 green days a week, one red every single week. That's $312,000 a year. At $500 a day, 10 accounts. Remember, 4 green days, one red every single week. That's still $500,000 a year. So I've been loving this. I'm still kind of playing with it to kind of figure out percentages, right? Because think about it, if we were trading our own capital, 0.5% on a 25K account is only $130. Like you can hit that easily. Notice what that is. Notice what the prop firms are doing with their rules. The more I think about it, they are tailored toward a very hedge fund mentality, but they're worded different. They're worded psychologically crazy. I don't know how to say that better. But 0.5% on your 50K account is only $275. So, anyways, I'm building this out. It's not done. This one's janky. It shows you the actual percent on growth before you get your payout. And I realized that the 250 accounts and the 25K accounts are substantially better in general. And I'll have to explain why. This math isn't true to form because I didn't know how to change it to 2000. But technically, the 25K accounts and the 250K accounts are better at the costs. I've had accounts that have had nearly $40,000 in buildup from Apex. I lost two of them, and then I lost 20 grand on two of them because I had four at the time when the catastrophic thing happened. I don't know, 4 or 5 weeks ago now. I needed a way to size for that, right? Because you don't realize your accounts can get this high. So a way to size for that, and it's never going to be exact either because most of us are using some kind of copiers, and none of the copiers have a perfect system where we can just type in, I want to trade one contract, I want to trade two contracts, I want to trade four contracts, I want to trade five contracts. They all have like a multiplier, okay, I think is one of the options, or quantity. And both of them have weaknesses or strengths. So since none of them are allowing us to do like a perfect system of one, two, or three, what I'm doing is I take my master account, and if I have anywhere around this, I'm doing one contract. Okay. We're pushing up again. If on my 50K accounts, I put that at 2. And then on these accounts, I put this at 3. Now, the accounts that I have that are sitting in this balance, I have some sitting here and a lot sitting in between here and here. What I'm doing is I'm multiplying, how do I say this? My 3. So this is times 3, and then everything else is times 2 of this. And that's how I'm kind of accomplishing this. So again, I'm taking that amount of risk and sizing down even below that because it's funded, and sizing down even below that because technology and glitches and stuff. So is this spreadsheet in the group? This is not, like, if you guys don't mind it being a work in progress or have any Excel skills, I don't mind sharing it. Like, I am not an Excel genius. I'm just my ex used to laugh at me and called me because I treat it like a video game. So I'm still not good at it. Like, but I love them. They make me happy. It helps me figure out like my own thought processes. It is not a work in progress. I can give it to the team. I'll give it to our COO and see if she can't clean it up a little bit, lock some formulas. and then I
I
can
was
add.
going to ask you that, Jenny. Good morning. I'm sorry. I was going to ask that question. If you could share this, and we can kind of maybe tailor it to our own likings, but I think this is awesome. It kind of gives you a visual of what you're trying to do even before you do it. So,
That.
yeah, if you could,
Well,
please. Thanks.
yes, sir. I will. Let me give it to the team. But check this out. Watch. If you want to know how many trades it'll take you to pass, obviously that's frustrating, but it's not as many as we think, right? To pass that $1,500 trade, that's 15 trades at 2 trades a day, that's 7 days. Okay. To here, look at what this is actually going to be. Even on these, like it doesn't take that much. And I have some other forms. Oh, how do I do that? Let me laugh. You guys can laugh at me now. Laugh at me. Where's the
This
un?
is awesome too, by the way, Jenny, because to be honest, I don't know how many, is it almost up to 2 years or maybe a little over a year now that we've been on the future side. And the prop firm specifically, as far as this group is concerned, and nobody that I've seen, no influencer, anybody is talking about this as far as with management and has broken it down and talked about longevity. Because the way that Jenny has laid it out, it gives you the right way to sort of trade and the way that you should do trade. But I think what sort of messes us up is that one with the prop firms, when you're in the evaluation stage, you're not making any money on the accounts. So there's always that urge to want to rush the process so you can feel like you're trading for something that's actually real or valuable. But if you look at like a traditional firm, if you're working with a firm or brokerage, you have to prove yourself before they give you live capital. So the evaluation stage, no matter how long it takes, you're proving yourself, you're making sure that you actually have a strategy and management that works, that's going to give you that longevity. So when you do transition to your live accounts or your funded accounts, it's the same process, same thing. And then the money will show because they always say process over, the money, the dollar side on it. And then eventually the money will come. So this is definitely a really awesome thing that you put and laid out, Jenny. A screenshot it. Everybody else, even if she doesn't has to send out yet, you can take a screenshot of it because the way that she laid it out and the management, I mean, for the most part, you should be managing that way, especially if you haven't had any payouts. I wouldn't really change much. And you can't trade lower than a micro anyhow. So just start off with a micro or whatever you want to do. It's up to you, but make sure it's proven. It gives you confidence, and then you can size up. Now, what other caveat too is that I know a lot of the prop firms do have monthly subscriptions. So if you all are worried about the time, you want to do this the right way, but you're worried about maybe the time frame, then you can go with what Jenny has recommended. Lucid is one of the ones that I do know that do not have any sort of reoccurring subscription fee. So you can take your time in doing that if that's something that you're interested in.
But Funded Next doesn't either, do they? I think they have a new account that does. Their Bolt account does, but their other accounts didn't, as far as I know.
They might, I'm not sure.
But just had a good point that we didn't mention here. Like, I'll tell you the things that are helping me. Number one, maybe we can print a blank check and put it in the group, and that will be the community that prints a blank check every month that says, I made by saving X amount of dollars by not blowing my accounts this month, because we don't celebrate that, right? We don't feel like that's YouTube worthy. And I get it. Like, we're all human here. I'm superhuman too. But I think that's celebratory. I think that is, I don't know if that's the right word to use there. You can laugh at me later, but I think that's something worth celebrating. We saved $1,000 by not buying more challenges. So maybe we didn't get a payout as many as you, especially with Apex with the 8 days and then the 10-day thing that I went through recently. I'm like, wow, that turns out to be a lot of weeks, technically speaking. But it's just realizing I also didn't buy any new firms. Like, I still have some that are from like one of the first huge promos that they had that are rollover, but I don't have that many active subscriptions. I'm not buying anymore. So that's something, right?